How is everyone doing? Welcome back to another episode of The Banker Next Door. I'm your host, Dr. Joe Berquist. Today, I wanted to cover a report from the Federal Reserve, which basically looked at how did small business owners use different payment channels in 2024. So we're going to pull this report in. So this is a report from the Federal Reserve. This was a report that was released in December of last year. However, this is called Findings from the 2023 Small Business Credit Survey. Now, I have covered the credit survey in episodes past. It's basically the Small Business Credit Survey is a survey that the Federal Reserve puts out every year. It's a fantastic survey, is usually chock full of great information that you could find out a lot of different aspects on what small business owners are doing out there. But this is just a small report. I think it's only about 12 pages. And this is just, again, focus on, how do small businesses use different payment channels, whether it be cash, checks, ACHs, how are they using this on different types of things? So let's go down and take a look here. So table of contents here just has an executive summary, just has customer payment forms, terms, and arrangements, payment terms and arrangements by industry, forms of payment accepted by industry, forms of payment and payment-related challenges, payment-related challenges by terms and arrangements, and then finally, payments-related challenges by industry. So the executive summary just says here real quick. So managing cash flow ranks as one of the top financial challenges that small businesses face, and timely collection of customer payments is critical to firms' cash flow. While firms also rely on funds from lenders and personal sources, customer payments are the primary source of cash available to businesses. To understand firms' experiences with customer payments, the 2023 Small Business Credit Survey included special questions regarding the forms of payment firms accept, their typical payment terms and arrangements, and the payments-related challenges they face. So what were some of the survey findings? Well, small businesses set a variety of terms and arrangements for customer payments. Payment in full at the time of service or purchase is the most common arrangement. Checks and card payments, that is credit cards, debit cards, and digital mobile payments, are the most commonly accepted forms of payment now. Approximately 80% of firms experience payments-related challenges, the most common of which is fees associated with payment processing. And then payments experiences vary across industries. Kind of interesting. This is executive summary continued. So table 1 is Small Business Credit Survey industry categories. So we have business, support, and consumer services. We have finance and insurance, healthcare and education, leisure and hospitality, manufacturing, non-manufacturing goods, production and associated services, professional services, and real estate, and then finally retail. Customer payment forms, terms, and arrangements. So small businesses set a variety of terms and arrangements for customer payments. Payment in full at the time of service or purchase was the most common arrangement. So again, customers pay in full at the time of service or purchase, 38%. Customers pay after delivery of product or service, 28%. And then that makes up the bulk of it. That's, you've got over 70% right there. And then you've just got customer makes payments on a set schedule. Customer pays in multiple installments, just 10%. Payment is made through third parties, 7%, and then customer pays in advance. Checks and card payments, that is one of more of credit cards, debit cards, and digital mobile payments are the most commonly accepted forms of payments. So forms of payments accepted, checks still at 80%. I did an episode on checks not too long ago. It was very interesting, kind of like check fraud, the use of checks. It's amazing. As much as banks would like to get rid of checks because of how much fraud there is, it's still a great payment channel. It's still an easy payment channel, and it's a very efficient payment channel. And as you can see here, 80% of payments still accounted for in checks. Credit cards, 74%. And then it says here, 79% of small businesses accept at least one form of card payment. So, which could be, debit cards, digital mobile payments, or credit cards. Cash is still used 65% of the time. So still a lot of cash running around out there. ACH, 56% of the time. Money orders, 17% of the time, prepaid gift cards 16% of the time, and cryptocurrency still only coming in at 1%. Customer payment forms, terms, and arrangements. Firms that require payment in full at the time of sale accept card and cash payments more often than those that take payment either after delivery, over time, or through third parties. So we can see here customer pays in full at time of purchase, like 93% with card payments, 85% with cash, 65% with checks, only 29% with ACH. Customer pays after delivery of product or service. Again, 69% card payments, 50% cash. And this 95% on checks here, which is good, interesting. Customer makes payments on a set schedule for ongoing services rendered. Again, here, checks, 84%, the top dog. Customer pays in multiple installments. Again, checks, 91%. And then payment is made through third party. So again, checks at 90%. So that's 4 of the 5 categories here. You still have checks leading the way, followed pretty closely by cards. And then, cash is used roughly about 50% of the time here in these other categories. So let's see here. Payment terms and arrangements by industry. So leisure and hospitality and retail firms most often require payment in full at the time of sale. Manufacturing firms typically take payment after delivery. So, and we'll keep on moving down here. So, forms of payment accepted by industry. So, firms in leisure and hospitality, retail and healthcare, and education accept card payments more than other forms of payments. Firms in manufacturing and professional services and real estate most commonly accept checks. Yeah, I don't think there's anything really shocking there, but yeah, you can see, yeah, obviously, yeah, leisure and hospitality, card payment, cash is up there still pretty high. Retail, card payment, again, cash also. Manufacturing, checks, healthcare and education, 90% with card payments, and then professional services and real estate, still checks leading the way, followed by ACHs. Forms of payment and payment-related challenges. Number of forms of payment accepted. So all employer firms, again, 19% card, 41% for, what is that? I think that's checks. Or no, I'm sorry, ACH. All right, that's ACH. And then 33% cash and only, or no, I'm sorry. Do I have that right? Am I reading that right? 3 to 4. And then, all right, we'll skip that. We'll kind of keep on going. I'm confused by that one. Fees associated with payments and processing are the most frequent payment-related challenge. 1/5 of firms reported no challenges. So fees associated with payment processing, 52%. Customers are slow to pay, 39%. Time-consuming processes, 20%. Delays in settlement or availability of funds, 18%. Managing multiple different payment systems, 13%. Fraud or theft, 11%. Customer demand for more payment options, 7%. And then only 20% said they experienced no challenges. But yeah, I don't think fees associated with the payment processing, no doubt that is absolutely a huge hot button issue, because it is very expensive. I mean, if you run a small retail store, or even if you're selling stuff on a website, I mean, just if the bulk of your payment is coming through debit cards, credit cards, mobile payments, you're paying a huge amount in processing fees there. Payment related challenges by terms and arrangements. So challenges with time-consuming processes and delays in settlement or availability of funds are most frequently experienced by firms that receive payments from third parties. Payment-related challenges by industry. So across industry categories, fees associated with payment processing are among the top challenges. Firms and industries that typically accept card payments were most likely to report that fees are a challenge. So we can see here fees associated with payment processing. Leisure and hospitality leading the way, followed by retail, followed by healthcare and education, manufacturing, and then professional services and real estate. And there you have it, folks. That brings us down to the end. But again, I think a lot of really good information there. I think the two, to me, the two big takeaways here are the fees. Fees associated with payment processing are the most frequent payment related challenge. Yes. And then, this year, forms of payment accepted by industry, whether it be cash payment, cards, checks, or ACH. I think it's good, again, to recognize and stay on top of these trends. Again, for all the people that would love to get rid of checks, yeah, I don't think checks are going anywhere anytime soon. But again, I think it's great to see these kind of reports and review them, just to see, what's going on, how are small businesses using these different payment channels, what's popular, what's not, what might be gaining in popularity, what might be slipping in popularity, what still has high usage, and ultimately, what are the challenges? Obviously, the fees from credit card processing are a major issue at the moment. I mean, the fees have gotten pretty stiff. But anyway, I'm going to wrap up. I hope you liked the report. There is a link to the report in the description down below if you'd like to click on it and go check it out. But I'm going to wrap up with, if you like this episode, please make sure to like, share, and subscribe, as that always helps the channel. Remember, we are on YouTube, Rumble, and all major podcast platforms. Please be sure to leave your comments down below, as I always love getting back to everybody. And as always, make sure to check out some of the other content on the channel. Have a great day, and I will see everyone again real soon. Thanks a lot.